Hey guys, welcome. Trade with Neil. This is Sunday night. It's a little bit before 8 p.m. Central Time. Thank you for being here. Had some technical difficulties last night. Sorry about that. I had a big storm come through, just cut me off. And then when I went and looked at the video, I think there was about 22 minutes of it. I noticed that I'm talking like this and my screen is not shared. So some way, somehow I had a little glitch. And so I just went ahead and canceled that whole video. And so maybe everything will go good tonight and we'll work together and be better than we were yesterday. So our itinerary will be, we'll do some chart time. I will share my screen with my trading platform and we'll go through some symbols on that. I want you to be a little bit acclimated to the VIX. I haven't talked to you much about the VIX, so we're going to go over that. I'm going to focus on TROX, Walmart, and TTD or Trade Desk. Those will be my three that we'll focus on because I'm really watching TROX and I'm in Walmart and TTD, and I want to show you that. We're going to look at the big three: Tesla, SPCX, and the huge semiconductor NVDA, which they will announce earnings next Wednesday. I'm going to show you FinViz and go through that stock screening process that we do to check on the RSI, the relative strength index. Then we're going to also look at stockcharts.com. Okay, that way you can see that RSI and that MACD positive divergence that I did a little video, or maybe I mentioned that about TTD. One of the reasons that I bought a little bit more of TTD was because of the positive MACD divergence. And then at the end of it, right at the end, we're going to look at Twitter or X. And real quick, we'll go through all the companies or highlight some of the companies that are going to have earnings next week, look at maybe some economic reports. And at the end of it, we'll do ticker time. We will do a little bit of a question. You got a question, and I'll try to answer that. If I need to pull back up the trading platform, I will do that. But thank y'all for being here. I'm looking at the chat. Thank you, Kim. Thank you, some others here. Trading Logic. But anyway, I see there's about 21 in here right at the beginning of it. But maybe everything will go okay tonight. I hope so. So let's get right in it, guys. Let's get better. So let's trade. Let's share the screen on the trading platform. And I trust you can see that. I hope you can. I'm going to take it off the VIX. We're going to go to the S&P 500. And the S&P 500 is a proxy, obviously, for the whole market, 500 best companies in the world. And I wanted you to see this 6-month daily chart. And I talked a little bit about this last night, but if you see here at the end of March, the S&P 500 is trading at 629, and 7 trading days ago, it's at nearly 780. What's the difference? Well, it's $150, and that equates to 24% return in 4 months. So if you bought the market at the end of March and you held on to it, you've done very well. Okay. And a lot of people, about half the country's got they've got money in their 401ks and things of that nature. And I'm sure that they have it in the S&P and other things. But so, our country, the people that's been in the market the last 4 or 5 months, they're feeling pretty good. Okay. So this is what I want you to check out on this screen. Look at the very bottom of the screen. It's the RSI, the relative strength index. When the S&P 500 came down to this 629 level, if you'll notice these 2 green arrows, the RSI traded below the 32 times. So remember, I love to buy good companies when they're on sale. How do we know when they're on sale? The RSI is trading less than 30. So when those stocks come down and they sell off, okay, I'm going to wait most of the time until it gets right at the RSI 30 or below. And for me, that's a technical oversold entry, if you will. And man, that would have been a great buying opportunity. And it is most of the time for most companies. It doesn't work every time, but most of the time it works. And I've got right here, I've got, look at the VIX. So what is the VIX? The VIX is the volatility index. All that is a fear gauge. If the VIX goes way up, that means that all your traders and all your investors, they're very scared. They're fearful. Well, what happens to the stock market? Fear goes up, the market goes down. People get out of the stock market. They put their money in cash. They sell stocks, and that makes the market go down. Hence, you have this RSI 30. So I'm going to carry you to the VIX page, and you're going to see that the VIX during this time at the end of March really spiked up. And let's look and see where the VIX is now. Okay, so here's the VIX. So right here at the end of March, you can see all of these candles way up here in the 30s. And what happened to the stock market? The VIX goes up, the stock market goes down. Great buying opportunity. And I've got a trend line showing you that the VIX has just trended lower, lower, lower. As the VIX goes lower, 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 the stock market goes higher, higher, and higher. So where's the VIX right now? Well, the VIX is at 1513 and it got down to 1418. So it looks like to me that we're still in that solid bull market. Okay, I don't see where the VIX is looking like technically that it's ready to go up. And so that's positive for stocks. That's positive for people that want to be long the market. And you got to think about it. Man, this is in the face of us being in the war. Gas prices have been up. So we get that war behind us and we start seeing gas prices come down. There's no telling where this market can go. Okay. So that's the S&P 500. That's the VIX. Let's segue right into some focus stocks. Let's go to TROX. TROX, ticker symbol TROX. Chemical company. They make pigment that goes into paint. Not a lot of painting going on. Houses. Okay. The housing market is not good. Hadn't been good for the last couple of years. So you can see this stock has gone down. I've been trading this stock for a long time. And I just traded it at the end of or the middle of July. It got below the RSI 30. I'm looking at it right now at 716. On July the 16th, it got below 30. I bought 1,000 shares at 575. I showed a video on that and sold that at a little less than $7 right after the earnings report, which would have been right in here. Okay. And then it's since come down. Well, if it gets back, it's on my watch list. I'm not back in it. But if it gets below 30, what do you think I'm going to do? I'm going to be buying it. Why did I buy shares and not buy options? Because this company, they don't have a lot of liquid options. They have options, but they're not liquid. Not enough open interest, not enough volume. And when you have a company like that, you're better off just buying outright shares. Most of the time, I'm going to buy options. But if it's a good company and it's on sale and I want to be a part of it and we don't have a lot of volume on the options, I will buy shares. Okay, that's TROX. Not recommending this stock. I'm just saying this is what I'm looking at. This is what is on my radar. So this is for educational purposes only. Your prerogative. You do what you want to do. I'm just trying to help educate. Okay, let's go to Walmart. Walmart did what I love to see a great company do. They announced earnings last Thursday morning. The earnings were okay, but their forward guidance was not. They hammered that stock. Okay, it opened up about $6-7 a share down. Got under the 30 RSI. I bought one call, and you can see it there on the screen. I bought a October 16 expiration, 100 strike. That's a 100 strike. I didn't go out of the money. I went in the money, and I bought a call. The RSI at the time, you can see it up here. It was at 28 to 29, and then Thursday it gapped down again, and I bought another one. And hey, you know what? Monday, if it gaps down tomorrow, I'm going to buy another one. Because why? Look at this right here. Walmart, the last 3 years, this stock has traded down below the RSI 30 3 times. This is the 4th time, okay? Thursday and Friday last week. But previous 3 years, only 3 times. How long did it stay under the 30? Well, look at it, 2 to 5 days. So realistically, if history repeats itself, this stock should come out of that 30 RSI in the next 2 to 3 trading days, maybe about Wednesday. Does that mean it will? No, that does not mean it will. Or it may pop out of it and go right back down in it, and it could get under $100 a share. Who knows? Nobody knows. I don't know. I'm just looking at the history. I'm looking at the company. And because I'm not sure about it, and because I don't have a crystal ball, that's the reason that I buy options way out. I don't buy weeklies. Most of the time, I don't buy 30 days. I'm going to go out at least 60, 90 days most of the time. I have bought some 30-day, but most of the time I like to get way out there to give myself time for this stock to do what I want it to do. And when you're buying options, you're going to have theta decay, and your option is going to decay. Your premium is going to decay the closer you get to the expiration date. So you really need to protect yourself on that. And the best way to do it is to buy an option that's close to the money, meaning if the stock is at 103.70, close to the money would be 103.70. Okay, and we can look at that right now. Let me go to the trade tab. Let's just do that. Here's the trade tab. There's October 18. I'm sure you can see that. And you can see, we're not looking, that's September the 18th. I'm sorry. Let's go October 16th. My bad. So you can see POS is showing you I've got a position. Okay, and right here's 100. So the strikes on Walmart are 95, 100, and 105. So you cannot buy an option on this company, this particular expiration date of October the 16th, unless it's $95, 100 strike, or the 105. So you're either going to be in the money or out of the money. You're not going to buy one at the money. So I chose 100. Okay, I wanted to be in the money to give myself a little bit of wiggle room, if you will, not knowing what the stock's going to do. And you can see in parentheses, I've got 54 days to expiration. And let's see here. I've got two calls, and looks like I've got 568 in them. And I don't think that's correct. That's not including commissions. But anyway, it's showing I'm up about $98.68. Not much, but got plenty of time on that. And I've got full confidence that Walmart will come out of that. And like I said, if it doesn't, the longer it stays under 30, I'm just going to keep scaling in. Okay, because this is one of the best companies in the world, like them or not. And I know it's going to come out of that and maybe get a 3-4 point push. Right now, pre-market, it's trading at 103.84. Okay, that's TROX, Walmart. Now let's go to TTD Trade Desk. So Trade Desk did a video on that, and I know everybody, or a lot of people, probably followed me on that. And as you know, it's your prerogative. This is entertainment purposes only, but I'm just telling you what I'm doing, and you can ride along, do whatever you want to do. But I want to explain this company and why I did this. First of all, it's a digital advertising company. If I remember correctly, they got $400 million in debt, $1 billion in cash. So they're well situated financially. Had bad earnings, bad forward guidance. The stock gaps down. I mean, it's at a 52-week low at 1283. And when we got into it, the RSI was below 30. And you may not be able to see this. It's on the bottom right. And if this thing is working the way it should work, my picture is probably going to be in that bottom right. But it got under the RSI 30 looks like on August the 7th. And man, it's just stayed there. But it came out, I think, about the 5th day. And we did the history. And you can see it here in white. The last 3 years, 13 times it traded under 30 RSI. It stayed under there on the average 5 days. And this stock actually came out the 5th day. But golly, right after it came out, what did it do? It puked. And it started fading and rolling back over. And so why did I buy 5 more options? Because right now, I've got 10 options My total cost is about $806.64. You can see it in the blue or the fluorescent, whatever that color is, and it equates to about 81 cents an option. So I'm losing money and on paper, but do I have plenty of time? I do. And that 818 is incorrect. I just noticed that. That's going to be October, I believe. Let's go to the trade tab. Yeah, TTD, it's October the 16th. I've got my calls are October the 16th. I don't know why, it's just a typo. So I've got 54 days for that to work out. And right now, they're trading at 58 cents. I'm down $226.64 on paper. So we'll see what happens there. So why? Let's get back to what I was saying. Why did I buy more? Well, two reasons. Number one, volume is trending down. Okay, if you look over here, you can see that volume is just going down, down, down. Number two, the stock is consolidate. It's in that consolidation phase. It's going sideways. Okay, and it's so far, knock on wood, it's holding that $13 level. It's had several days to go under 13. May go under it Monday, tomorrow, but it needs to hold the 1283. 1283 is massive support for this stock. And there's still an 18% short interest. And it did another thing that I'll show you when we get to it. If you can remember this, I will. MACD positive divergence. I'm going to show you the chart on this on stockcharts.com when we get there. And you're going to see MACD positive divergence on this company. So the momentum, even though the price is going down, I'm going to show you that momentum is going up. The underlying current for the company is positive, even though the share price is beginning to come down or has come down. Okay, but you got to remember, not a lot of volume. Volume means conviction. You want the stock to go down with low volume, and you really want it to go up with massive volume. Okay, you want a lot of conviction if you're long, when it goes up, and you don't want a lot of conviction if it's coming down. So there's some reasons there that I did that. Will it work? I have no idea. We'll see. Maybe it will. Okay. So that's TROX, Walmart, and TTD. Now let's go to the big three: Tesla, SPCX, and the one that's going to announce next Wednesday after the bell, NVDA. Okay. Tesla, if you will notice, got below the RSI 30 on 7/23, stayed there all the way to the 29th, it looks like, or nearly the 30th, and then came out of it. Boom. It has had, the last week, it's done really well. Okay, I bought that. I sold it. Obviously, looking at it now, I sold a little bit early, obviously. So what do we need to do in Tesla? We need to get above 369.44. That will fill the gap after the earnings report. We get above that 369.44. Next level we're looking at is 433. Really, I probably should say 400 and then 433. I still own Tesla, some shares that I've had for a long time. I'm just saying, when I say I sold it too early, I bought it as a trade. Okay, a swing trade right in here at 730, and then sold that and an option last week or maybe a week before. I can't remember. But anyway, Tesla's looking good. Okay, robo-taxis beginning to roll out. I think that's the word on the street. And so the stock's catching a bid. Right now, as we speak, Tesla is up about $4. Pre-market, I'm looking at 366.99 bid. 366.19 bid, excuse me. So Tesla's looking pretty good. Needs to get over 369. Okay, so SpaceX, let's go to SpaceX. Let's see here. SpaceX, we went from a 34% short volume down, or short interest, down to 12%, which is good. People are covering their shorts. I mentioned a bull flag, and it has been flagging. All that means, it looks like a flag pole. You've got here's your pole, and right over here's your flag. Level in the sand here, 130. It needs to hold 130. If you look at your daily chart, you'll see that it touched 130, 1, 2, 3, and it actually got down pretty close to it Friday. So 4 trading days out of the last 10, it has touched close to 130. So 130 is your support. 150 is definitely your resistance. If it breaks 130 next week, it could go all the way down to that 104.83. So keep that in mind. Another thing we have to keep in mind, and let me just stop. I am very excited about SPCX. I think it's going to be a fabulous company for people that gets in it this year and next year for the next 5 to 10 years. But we have some headwinds, okay? And the headwinds are supply. And you can see in the white, they're going to release 319 million shares on September the 9th. And then you see 59 and another 328. So that's 700 million shares in September. They're going to release 328 in October. And then in November and December each, you're talking over 1 billion shares. So they're going to increase that supply all the way to June of 27. They're going to, that means the float's going to increase, and it's going to offer a lot more shares for people to buy. Now, they've been buying them. Institutions have been coming in and buying them. People's been covering their shorts. So this excess supply has really not hurt the stock a whole lot. Last week, it was a little bit weaker, but we'll see. But the RSI on it right now is, let's see, it's 51.82. So it's a long way from being 30 or under 30. And it may not ever get back down to that 104.83. I have no idea. But I just want to be patient with it right now. I don't want to dip my toe right now just because of that overhead supply. And but I could be wrong. And we'll see how that goes. Okay, so that's SPCX. Right now, SPCX is trading at 136.13. 136.13 is the bid on SPCX. So the big dog is going to be NVDA. If you know anything about the stock market, if you know anything about the top 10 companies in every mutual fund, S&P 500, whatever, you're going to see NVIDIA. It's the #1 semiconductor company in the world by far. Okay, makes tons of money, tons of cash, and I don't have to sell it to you if you've been keeping up with it. But they announce earnings next Wednesday after the bell. They will move the market. This company will move the market. If they have really good earnings, we'll have a really good positive day Thursday and Friday, more than likely. May even see all-time highs on the S&P 500. If they don't have good earnings, or if they have light forward guidance, we could see the market roll over even further. So be careful purchasing anything unless you're really convicted next Monday and Tuesday. If I were going to buy shares, or I had some things in my mind that I want to participate into, I would definitely probably wait till Thursday, because you could get a cheaper price if we have a downturn, something like that. Walmart, I'm going to buy it Monday. Why? Because if we have a downturn, well, that's a more stable. It's like the food and the pharma stocks. They're going to get into that. They're going to segue out of NVIDIA and buy the Walmart, the Target, the Dollar General, the Merck, the Pfizer, the Kraft and ConAgra companies like that. Okay, so expected move is $14, and they're going to do the earnings, as I said, after hours Wednesday. Technically, you can see the chart. It's been in a channel. We got a 232 to 189. So there's your channel. And so, you know, right now it's trading at 214.72. It's up $2 right now. Let me see if there's any news. Right now, the bid on it's 216.91. I don't see anything really, honestly. I don't see anything that is spiking that. I mean, there could be something, but here's the thing that could happen. NVIDIA could go up tomorrow, Tuesday, and maybe consolidate a little bit Wednesday. Why? They're leading up into earnings. A lot of times stocks do that. They'll have a little bit of a push up to those earnings. And then the day of the earnings, especially the last hour or two, Wednesday afternoon, you'll see people either get out of it or begin to short something. and get a little reticent, if you will, on their buying. Okay, so that's NVIDIA. Okay, so let's go to FinViz. I'm going to stop sharing, and I'm going to go back to the page, and I see tons of people in here. Thank y'all for being here. What platform? I'll look at some of these questions real quick. What platform do you? I use Schwab. I use Thinkorswim. That's TOS. I've been trading online since 1996. I started an Ameritrade account in 1996. I quit calling the broker in Memphis and Tupelo, and started doing everything online myself. So Ameritrade, TD Bank in Canada bought them out, and then let's see, Schwab bought TOS out a couple of years ago, and now it's Schwab, but it's TOS, TOS, Thinkorswim. Okay, you should be a few dollars. You should get a 10%. Thank you. Hi, Neil. First time here for me. Thanks for sharing your knowledge and experience. Hey, man, look, I'm a real guy. I'm not selling anything. By the way, lots of fake accounts out there. I got people DMing me, and I'm like, no, I would never send you anything and tell you I want to manage your money. I want to do this, send me this or that. I'm doing this because I want to make a difference. I want people to not make the mistakes that Neil made the last 40 years when it came to trading, whether it's day trading, swing trading, or just general investing. Okay. So I can just stop right here and tell you, most of our money is in the S&P 500. Okay. Then I've got this trading account, and that's what I trade with. I day trade with it and I swing trade with it. But most of our money, like I said, is in the S&P 500 best companies in the world, and we sleep at night. You go to bed and you sleep at night. You diversify your money. Okay. So I have learned that the hard way over the last 40 years. You don't take everything you've got and try to trade it and try to double it and all that kind of stuff. You try to be prudent and to be smart with things. Okay. All right, let's go here. Copart Tractor Supply has been on a rally after a terrible year. Yes, they have. I bought some Tractor Supply when it got under 30 back, I don't know, 6 months ago, and sold it. And I'm not sure how I don't. If I made money on that, I didn't make much. Okay, but it's a good company, and retail has just been, it's been tough with higher gas prices. All that does is cut our discretionary income. I try to tell people that, you $50 to fill up versus $40. Where's that $10? It's in your tank. And that $10 is discretionary income that could be, spent at Walmart, McDonald's, or whatever. So high gas prices hurts retail really quickly. And the reason Walmart's standing up okay, and it's because 60% of their sales is in groceries. Okay, so let's see. RSI, KY Sports. RSI was 32 Friday. I'm not familiar with the company, but you can check it out and just watch that. Let's see. Okay, thank you. Hey, I appreciate that, David or Davis. Thank you very much. This guy, then another guy or person says, laugh out loud, I'm addicted to going all in. Hey, I don't know who you are. I don't know how old you are, but I've been there. I've gone all in before. But as you get older, you understand that you dip your toe before you dive. And you don't go just all in. Okay, so let's share the screen and go to FinViz. FinViz is a free website, finviz.com. This is their homepage. And all of these free websites now, tons of advertising. All I can say is I'm sorry. You just got to work around that. But FinViz is a phenomenal website. Okay? And so I'm going to show you exactly what I do when I'm like, what's out there that is oversold that could be a good company that I would be interested in. First thing I do is I go to the screener tab right here, click it. And then I go over where it says descriptive, fundamental, technical, news, ETF, and click all. I'm going to click all. And when you click all, you've got all of these different filters or metrics that you can punch in to make the companies or to make this page spit out these companies that you're looking at that fit your different metrics or your different filters. So the first thing I do is I go to market cap in the very first column. At the second one, market cap. Okay. If you don't know what market cap is, you can scroll your cursor over market cap and it will explain it. And then I go down to plus mid. It's about halfway down. It says over 2 billion shares. So what does that mean? I want to look at companies that have a minimum of $2 billion in market cap. Why? I'm not looking for startup companies. I need solid companies that's been around. That's just me. That's the shoe that I wear. You can do anything you want to do. You can do any market cap. And if you want to, you don't click anything, you leave it on any. Okay, so I'm clicking 2 billion. And then I'm going to go down to the second column about halfway, a little less than halfway. There's your RSI, Relative Strength Index. The 14 in parentheses means the last 14 days. Last 14 trading days, RSI. I'm going to click it, and yes, I'm going to go to oversold 30. Click that. I'm not finished. I'm looking for companies that have tons of volume. If you don't have a lot of volume, you cannot get in and out of the stock. First of all, you're not going to have options even available. Secondly, even if you buy shares, you're going to have such a wide bid ask, and you don't want that. You don't want the bid to be $1 and the ask to be $1.50. That's a 50-cent spread. You want it to be $1 and 103. Does that make sense to you? Well, the way you get that is volume. You got to have a lot of volume. So on volume, right up under RSI, you want to click average volume. I think for me, I click 1 million shares. I want to trade, or I want to look at companies that have a minimum 1 million shares every day when they trade. Okay. And then the last one I click all the way to the right at the very top, it says country. I don't want any country. Okay. I'm not a nativist and I'm not a xenophobe or anything like that. But when it comes to investing, I'm looking for companies that are based out of this country. So I'm going to click it and I'm going to click USA. USA-based companies, okay? I know the politics in our country, and I'm just more comfortable, okay? So when I do that, I'm looking at lots of companies. I've got 2 pages of companies right now. So it lists the ticker symbol. The very top, we've got AON, and it's an industrial. The industry is building products and equipment based out of USA. Here's your market cap, 6 billion market cap. It's got the PE, that's price to earnings. There's your price, and there's your change, and there's your volume. Even though that's 984,000 shares Friday, the last 14 days, that average volume is going to be 1 million or more. Okay, so I'm going to just glance over it and say, hey, Neil, what looks good to you? What are you familiar with? If I'm not familiar with the company, okay, I'm probably going to move on. I'm looking for companies that I'm familiar with. I know what they're doing. And, but if the company, if I'm not familiar with it, obviously I would look it up. But anyway, let's go here. We see Southern Company based out of Atlanta, Georgia. This is an electric utility company, and I'm a little bit familiar with that. Okay, it looks like if you look at the sector, I see a lot of real estate, industrials. I see some utilities, but overall, I don't see a company in there that really pikes my interest. Now, there's 2 pages. It's in alphabetical order. So Walmart's probably on this second. I see it, Walmart. So out of 22 companies, what do you think I'm going to be interested in? Walmart, for sure. Everybody knows them. And it traded 44 million shares. Okay. All right. So it's still expensive. You can see the PE is 37.54. I mean, Walmart would have to sell off, in the 80s and 90s to get that down to 20. But I don't look at PEs. I look at RSI and I look at the history. So out of this would be Walmart. I would definitely look at that. And what I would do is I would click on Walmart, and then it's going to carry me to this. And you can see the chart. It's giving you a daily chart here, about a year, it looks like. And then there's all kinds of financials. And the first thing I look at is this short float over here on the, far right next to the last column. We got a 1.62% float on shorts. So there's not anybody shorting it, which is good. And then I come down here and I look at the earnings per share and the sales and the shares outstanding. Well, you can see that Walmart's sales are still going up, and you can see that their earnings went up, but not by much. And I like the shares outstanding actually are going down. So that means they're buying back shares. And then you can keep going down further, and then you can look at what are the analysts saying. Look at the red downgrades. I mean, there's 4 in a row. And then on August 20, these folks downgraded it to a buy from accumulate, or to accumulate from buy, But then I look even further, and you can see all of these news. So there's just a ton of information on FinViz that if you get acclimated to that, you can really get educated. So that's how I look at the RSI 30, and that's how I screen for it. So I'm going to stop sharing, okay? And I'm going to go back, and I'm going to look at our chat, and I'm going to go to the chart. Okay. I don't see anything there. Okay. So we still got some folks in here. Thank you for being here. Let's go to, I'm going to share a stockcharts.com chart. And we're going to show you, I hope you can see that. You should be able to see it. So I'm going to show you on this website how to set this chart up. This is the default chart. When you go to it, it's going to default to this chart. And most of the chart's okay. And you can see, I'm sure you can see all of these advertisements. It's crazy. I mean, absolutely crazy. So you're going to scroll down, okay, and go to chart type. And if you click that, at the very top, it says candlesticks. I like candlesticks. Okay, and then right under that, it's got range and it's got years. Go to years and click it and click 0. And then go to months and click 3, because that's going to make the chart a lot more clear. Does that make sense? And then we're going to go down to indicators, and at the very top, it says price performance. You're going to click onto that, and you're going to scroll down and find RSI, Relative Strength Index. Click it. And then at the very bottom, the blue square says update chart. You're going to click that. And when you do, you're going to have a 3-month chart. And at the very top, it's got RSI. And at the bottom, it's got MACD by default. Okay, so let's look at Walmart first. You got to go to the symbol box and back everything out. We're going to punch in WMT. So you can see on the screen. Okay, let me do that. Let me right click and open it like this, and we'll take the advertisements out. So you can see right here in June we got under 30, and July we got under 30, and we got under 30 Friday, but it closed up. It didn't close up, but it closed a little higher than it was at the time when it got under there. But 3 times here. Then there's a time in 2025 that it got under 30. But this is what I want you to get. How long did it stay under this 30? Not long. You're talking 2 or 3 trading days here. Here's about 2 days. Okay, so it's not staying under 30 long. Now, to be negative, it didn't get above 50. See over here to the right, you've got 70, 50, and you've got 30 right here. The 70 and the 50, or excuse me, the 70 to 30, they've got the black font, the little deeper, heavier font. Okay, over 70 is over bought, under 30 is oversold, and I'm looking at oversold. So you can see the history of Walmart does not stay under 30 very long. And what we want to do is perfect Perfect trade would be to buy it under 30 RSI and wait for that RSI to get up close to 50 and sell it. Why? Because of history, just as a trade, a swing trade. Okay, so that's Walmart, and that's the RSI. And let's go, I wanted to show you the MACD on TTD. So here's TTD, and you can see the RSI is 3148. And we bought the stock right here when it was under 30. You can see it just stays under 30. I think it stayed under there about 5 days. It popped out, is up over $1 a share, and it's puked and given every bit of that back. You can see it right here. It popped up right here to about 1477 high of the day. But MACD is at the very bottom of this chart. So let me right click and go to open chart in new tab. Okay, we could take that advertisements out. I hope you can see this. I'm assuming you can, seeing this. And Trent, if you're watching, you can text me and let me know. But I don't think you're in there. Anyway, all right, so at the very bottom, you see this MACD. MACD is a MACD. That's an acronym for Moving Average Convergence Divergence. You can look that up, and it'll tell you exactly what it is. But I want you to notice this histogram. See these bars? And by the way, you want the black line, okay, to cross over the red line. That's very, very positive. Okay, a lot of people they don't enter a stock on anything but a MACD crossover. And that's another trading entry, and that's another video. But what I want you to notice about TTD is two things. Number one, the stock is coming down. Do you see that? The stock is trending down, but look at the MACD. The MACD is trending this way. So if I were to draw a line, you'd have a line going down this way, but under the MACD, you would have the line going up. So you have a positive divergence. In other words, the momentum of the stock is going up and the price is going down. Therefore, you have that divergence. So this is a technical indicator that tells me that we have a possibility for TTD to see some appreciation next week. Do we know that's going to happen? No, nobody knows for sure. But that's the way that you look at that MACD. Most of the time, if the MACD is going down, the price goes down. But every now and then, price will go down and MACD is going up. And a lot of people look at that as a very good time to enter the stock. And that's the reason I bought more of it. Positive MACD divergence. So if you want to go, if you got a laptop and you're like, no, I got my phone. I've got my phone here, and I've got an old computer. You could just go to stockcharts.com. You could punch in this stuff and punch in RSI, and that's what you could watch on companies every day. You could go to FinViz and screen for your stocks and do all your buying and selling on your phone. You don't have to have a desktop to do things like that. And I think most of you already know that. Okay, so let's keep going. All right, so I'm going to stop sharing. I'm going to go back to the page, and I see some thank yous. Man, I appreciate that. I appreciate y'all's encouragement. Okay, I was in TTD, but then I realized Amazon is crushing them. They charge 20%. Okay, I get it. Not a bad thing. Okay, so I want to, let's see, what's the next thing? I want to go to Twitter, or X, I should say. And if you have a Twitter, if you have an X account, okay, you can follow, or you can, I don't follow Stock Trader Network. I think I follow 3 people, 1 trader and 2 trading companies. Don't pay anything. I don't pay no money, but I just follow them because they have some decent ideas and they seem to be fairly reputable. But anyway, Stock Trader Network, you can follow them on Twitter or pull it up like I do. Every Friday, they'll come out with this calendar. So it tells us the companies that's going to announce earnings next week. Pre-market on the left here, you see pre-market, and then you've got after hours. So stocks are going to announce their earnings before the market opens, 8:30 Central Time, 9:30 Eastern Time, or they're going to announce their earnings after the market closes. That's going to be 3 o'clock Central, 4 o'clock Eastern. Okay, and then another thing they do is they give us the economic data. And then at the very bottom, there's company events. So the big company event next week is all your big companies are going to be at Jackson Hole, Wyoming. Okay, hobnobbing around and doing some talking and things of that nature. So they do that every year. Economic reports are important. I look at them every week. I want to know what's going on because it can move the market. So let's look at it. So Monday at the top here, you got Monday, Tuesday, and then let's go down at the bottom. You got Chicago Fed. Tuesday, we've got a Fed president speaking. You've got some employment data, new home sales, another Fed speaking. 8:30, these are in Eastern time. So that'd be 7:30 my time. We got core PCE, personal consumption expenditures. You've got the GDP, gross domestic product growth rate. Then you got another Fed president speaking, or it looks like the same one speaking again. So first 3 days, not anything heavy that's going to just really move the market. Thursday, you've got your normal jobless claims. You've got some trade balance, retail and wholesale inventories, the balance sheet of the Fed. And then Friday, you got Chicago PMI. That'd be the purchasing managers index, non-farm payrolls. It's not like a PPI or a CPI or a Fed announcement. So for me, I don't see anything that really stands out that I'm like, hey, Neil, you really need to be watching this when it comes to any kind of economic release next week. So I'm going to go to earnings. So Monday, you've got before the market, you can see looks like some Chinese companies, Korean companies. Tuesday, you've got Dick's before the market opens. You got BMO, Scotiabank. I don't know. I know Dick's, the retailer. Then after the market closes, I think everybody knows what Zoom is, Intuit. So there's really no, Dick's might be something to look at after they announce the earnings. I can't believe that Dick's any retailer is just blowing and going right now with gas prices and food prices. I just feel like discretionary income it's been squeezed. And I just can't see any retailer just blowing and going. Or at least if they may have good earnings, but I can't see them saying, hey, man, the next 3 months, we're going to just kill it. So you might get a chance to buy some of these retailers. I'm seeing a lot of them. After they announce earnings, they may trade less than 30 on the RSI. And you can enter that if you are interested. Okay, so Wednesday, you got Kohl's before the bell, Abercrombie and Fitch, Williams, Sonoma. You got this Lee Auto and Bath and Body Works. Used to be Bed Bath and Body Works. I guess it still is. But anyway, then after the bell, the big one, NVDA. You got Synopsys, CrowdStrike, HP, Agilent, Salesforce, Okta. And then Thursday, I'm seeing Best Buy, Dollar Tree, Dollar General. You can see this just like me. And then after the bell Thursday, Marvell will be big. Marvell, there'll be a lot of volume around Marvell. Firm, Ulta, you got Rubrik and Workday. A firm might be something to look at, with the economy, not booming. And then with discretionary income, being squeezed a little bit, a firm may have some good earnings. People may be, doing a lot of that financing, if you will, through Amazon and other places. So they could have good earnings and actually have pretty decent forward guidance. I'm going to be watching really a couple of companies. I'm going to watch Dollar General and I'm going to watch NVIDIA. But the big one's NVIDIA. NVIDIA, I'm not going to be buying NVIDIA going into the earnings. I'll look at it after they announce their earnings. And if they sell off, I will certainly dip my toe if it gets under the 30 RSI. But this is what I do every week. I look at what's going to be, what companies are going to announce earnings next week. What are the economic reports? And I get that from X. and I can get that from Stock Trader Network, and they do a pretty good job on that. Okay, so I am going to stop sharing on that. I'm going to go back to my main feed, and if you have a ticker, if you have questions, I am going to write them down right now. Okay, let's see, TJX. I see TJX, TJX. What I'm going to do is pull up my trading platform, and I'll try to give you some levels. Let's see, crowd is down from its high. What do you think? CRWD, crowd. As you know, they're announcing earnings next week. This is a security company. Marvell is a good one. Jetson said the next trillion. Okay. Do you have any questions, chat? We got a few people in here that you're interested in. Anything that I can help explain to anybody, because I'd like to have those now if you want to punch them in, and then I can open up. I'm looking at EXTR. Okay. Waiting on ASTS, space company, really good space company. Waiting on buying heavy, VUG. Okay. Snow, Visa, Boeing, BA. How much money should I have to trade on one stock? Boy, that's a great question. I wouldn't put more than ENB. I wouldn't lose more than 2% of my portfolio. Let's look at it that way. How much money should I have to trade on one stock? There's not a magic answer. You can have $500 in your account, and you could buy out of the money calls on NVDA with that $500. But you're going to have to put a decent amount of money in there. What I would like for you to look at is this. Say you've got $5,000 in your account, and you need to say to yourself, I cannot lose more than 2% on a trade. Okay, so what is 2% of 5,000? Anybody? It's $100, isn't it? Right? 10% of 5,000 would be $5. So you wouldn't lose more than $100 on a trade. So what does that mean? That means if you bought something, for $10 a share, you couldn't lose over $1 a share if you bought 100 shares. So that's what you got to look at. You got to look at, whatever money you put into a stock or a company, you can't lose more than 2%. If you got to be out if you lose $100 on a $5,000 account. You got to get out of it. You made a bad decision at that time. So I hope that helped you a little bit. I did a video on that about about a month ago. ENB, Microsoft. Hang on, MSFT, gold, GLD. Seems like a lot of buzz on crypto. Any thoughts? I have a little bit of Bitcoin. This is what I would like to tell you about crypto. Here it is. I would put most of my money in the market. Okay. I'd put a very small amount on crypto because there's so much uncertainty. That's all I know to tell you. I mean, should you participate? Like I said, I would put a little bit if I wanted to participate, but to me, I'm just not comfortable with putting a ton of money in it. Okay. Just a whole lot I don't know. I understand your entry when RSI gets to 30. Can you discuss your exit when you take a profit or stop loss? You can profit. You can sell it when it's 50 RSI. That's a great place. Obviously, you need to get out when it gets to 70. The next thing you can do is if you buy more than one contract, like right now, I've got 2 contracts on Walmart. Okay, let's say Monday, tomorrow, it gaps up to 105. And I'm automatically, my calls go from, I can't remember now, $500 and something, $5 and something to say 7 or 8. And I've got a 20-30% profit. I could sell one of those contracts and go ahead and capture that profit and then take the other contract and put a stop loss on it instead of selling both. Or I could just sit back and not do anything. But I would sure want to capture some profit on Walmart if we get a gap up and I get up 25, 30% on my options. I hope that made sense. Okay. You could sell yeah, that's true. Amen. CRUS. Okay. What is the minimum gain you want to make on a trade? Minimum 25% on the option. Okay. 10% on shares. But that's the way I try to do it. Okay. Look, guys, I don't try to hit home runs. I'm 61 years old. I've been doing this a long time. And I have learned you wait for the fat pitch, you wait for the strike down the middle, and you make a good swing. And if you do that, you'll have a good batting average over a long period of time. Remember, people in the Hall of Fame are there with a 300 batting average. What does that mean? That means they fail 7 out of 10 times. Okay. But I don't try to hit home runs. If you try to hit home runs, you're going to blow your account up. So I'm not the guy that's going to get up there and swing at every pitch. I'm going to swing at fat pitches. And a fat pitch to me is a good company like Walmart, oversold RSI. And to me, that's right down the middle. And even at that, I'm not buying 10 contracts. I'm not putting $6,000 in it. Okay. Right now, I've got, I thought you saw on the trading platform, I've got, I think, a little over $1,000, 2 contracts in it. So I just, you can play the game a whole lot longer if you'll strive for fat pitches and try to hit base hits, not home runs. Okay. I've never traded an option, and I'll have to look into it. Okay. Listen, the easiest trade is stocks. You need to hear that. Options they can be sexy at times, but honestly, all options are is a derivative of the stock. You know, one option is 100 shares of the stock. All you're doing, instead of me buying 100 shares of Walmart, okay, and spending $10,000, what am I doing? I'm buying one option for 500 and something. But if you buy shares, there's no theta decay. You don't have to worry about that. You can sit back and you can say, you know what? I bought Walmart under 30 RSI. I don't care if it takes 6 months for it to go up. I've got shares and I'm just going to sit back. Buying shares is the easiest trade. Let me say that again. Buying shares is the easiest trade. It's less stressful. It costs more money, but it really is the easiest trade. So don't forget that. If you don't know anything about options and you've been buying shares, keep buying shares. Don't worry about it. That's the easier trade. You don't have to worry about all the other directional bets and spreads and stuff like that. Okay. Do you consider buying, selling calls? I don't sell calls. That's naked. You can sell some calls, covered calls. You got the stocks. You can buy puts. I've bought puts, okay, before. But most of the time, if I buy puts, I'm day trading. I don't do that usually on swing trade. Okay. If I'm gonna buy puts, I'm gonna do it on a day trade. Now you can sell puts, and I don't see that in there yet, but a lot of smart people sell puts. And all you're doing, just like right now with Walmart, it's at 103. You could sell a put, okay, for $90. Stock comes down to 90. Okay, you're going to get called in there and you're going to have to buy it. But you've bought 100 shares of Walmart at $90 a share. And all the time you're creating some credit that they're going to pay you when you sell that or sell that put, excuse me. But here's the thing. If you sell puts, you have to have that money in your account set aside. You can't trade that money. So if I sold a 90 strike put, I'd have to have $9,000 set aside in my account. Okay, they earmark that money, so you have to remember that. Do your research on that. Okay, let's see. All right, let's let me go to, I'm going to share the screen on my trading platform and go through these tickers. If you'll give me just a moment here. Let's go back to TOS, and let's punch in the first one, TJX. I'm going to stay on this 6-month chart, TJX, and you can tell by looking at it, bad earnings. The RSI is at 25.39, and wow, it looks like a buy. Okay, I haven't followed this company, had no idea. Let me scale out here real quick, and we'll look at it together. Instead of a 6-month chart, let's go to a 3-year chart on the daily. And I'll show you how I do this. And I'm going down to the bottom at RSI, and I'm looking at a company that got below 30 on the RSI. 1, 2, 3, 4, 5. So in the last 3 years, TJX has been below 30 on the RSI 5 times. And here it is again. And it looks like it doesn't stay under the RSI 30 very long, just from what I'm looking at. Okay, then I'm going to come over here and look at the news. And I think it's just Citigroup downgraded it to neutral, lowers price target to 154. And the low is 139. So TJX to me looks like a company that that is buyable. Okay, so would you buy 100 shares at $1.40? Okay, 14 grand. Or would you buy options? So let's go to the options on TJX. And I would definitely look at October 16, 54 days out, and 140. I see a 140 strike, and not a lot of volume on that. So I don't like the volume. We only have 85 volume contracts and 190 open interest. The 160 call has a ton of open interest, but the bid ask is too much. So right off the bat, honestly, I would say that for me, if I bought TJX, I would want to buy shares, but it does look like a buy. I think the risk reward on TJX looks pretty dang good. Okay, let's go to crowds. And this one is announcing earnings next week. Chart looks unbelievably good. Look at that. It has had a little bit of sell-off the last week. So has the S&P 500. RSI is clipping at 42. If you own it, I wouldn't sell it. But as far as new money today, I would not do anything until after the earnings. I'm just telling you, looks like it's going to announce on 8/26 after the market closes. And maybe that's Wednesday. I can't remember. So good looking company, good looking chart. I mean, it's gone from 85 in March to 227. I mean, so yeah, that's a no-brainer. It's done really, really well. The only thing, now think with me, what's big in our country, in our world right now? 2 letters, AI, right? So what is AI going to do to all of these companies like this? Are you going to be able to just, have Claude and say, okay, here's the algorithm. I need this protected and this protected. I don't know. We'll see. I'm looking at a 4-for-1 split it had too. It split 4-for-1 on 7-2. So the company's done really well. But it looks good, but I just wouldn't buy it before the earnings. I'd wait till after the earnings. If it were me, I would not play earnings. I got to hurry. EXTR. Okay, Extreme Networks. Chart does not look good. It's in a downturn. It just come out of the RSI 30. That's positive. And it looks like it did it Friday. Okay, I'm looking at the last trading day. The last 2 trading days, I see it's a bullish engulfing pattern there, or ticker, or not ticker, but a candle. So that looks really good. I don't see a blue one though, we need a blue candle. We need some positive buying there, but it looks like it got under the RSI 30 on 8/19 and 8/20 and came out of that Friday. So it may be ready to rock and roll. If you're going to buy it, I would wait until it traded above Friday's high, which is going to be about 23. It looks like it finished at the high. Let me go to flexible here. We can get a better look. Let's see. I lost it here. Let's see. EXTR. Yep, it traded at the high of the day Friday. So look at pre-market. It needs to be over 2304. See what it's doing pre-market, and I wouldn't buy it unless it traded higher than the previous day's high. And if it does that, it may be off to the races. And you got good support at $22. So if you want to look at a stop loss, that would be my stop loss. Anything under 22, I'd get out. Okay. Let's go back to the 6-month chart and ASTS. ASTS is a very popular space company, and the RSI on it's 50. So it's really trading kind of in a channel. And if I had it, I would not sell it. Let me say that loudly. If I had it, I would not sell it. And I would wait. I mean, it could be $100 a share in a week. Okay. It wouldn't take much. And the only thing bad about these space companies is they do issue stock, which dilutes the stock, and that makes the share price go down. But every time they do it, people come in and buy the dip. But I do think it's a good holding, good company, even though you have SPCX out there. But I like ASTS. And would I buy it tomorrow? Well, I wouldn't buy it because I like to buy what? RSI less than 30 for swing trades. Now, day trade, if you're going to day trade it, it needs to trade above this previous day high of 70. So I would wait for the stock to get over 70 if I'm going to day trade it. And looks like your ceiling, your resistance is about 75. This dude gets over 75, it's off to the races, all the way back up to 91, 92. Okay, let's roll. All right, let's get out of that and let's go to VUG. Never heard of it. Okay, this is a Vanguard ETF. Okay, exchange traded fund. I love Vanguard. We have Fidelity. Most of our money at Fidelity, but Vanguard's a great company. Okay, and the growth ETF, I mean, dang, stay with it, man. If you're in it, stay with it. Don't sell it. It looks good. It's going to be good, and it's going to be very cheap. So that's the thing I like about those ETFs, mutual funds. They're very cheap. The expenses. Snow. Okay, I need a drink. Very strong. Okay, Snowflake. Very, very strong. Chart looks good. Had a great day Friday. Excuse me. If you own it, I wouldn't sell it. I wouldn't buy it because the RSI is right at 70. It's just too frothy for me. I don't want to buy up here. Okay. The risk reward for me is not where it needs to be. And it's announcing earnings, it looks like, on 9/2. So the stock may move up to earnings, but it looks good. Okay, Visa, same deal. Okay, if you own it, don't sell it. Looks good. Would I buy it right now? Not at these levels. I don't want to chase something way up here. Okay, BA, that's Boeing. I think Boeing has had a difficult time. I knew they had. You can see they're very choppy. Boeing is very emotional stock because it depends a lot on the news. Plane, the door flies off or one crashes or a contract. They have contract issues. Boeing stock goes down. Long-term holding. I think Boeing is one of those companies. If you will wait till the stock gets down below the RSI 30 and then you buy that stock and you hold it. I wouldn't buy options. I'd buy shares. You can see the chart here in March. It got under 33 times. Didn't stay under there probably a couple of days. And that's right around this 187, 190 level. And look what it's done. So there's your history lesson on the RSI again. Okay. ENB, if I wrote that down correctly, ENB, I think I did. Enbridge, don't know anything about this company. The RSI clicked below 30 twice, it looks like. 1, 2, especially right in here in August. Why? Earnings, it looks like. They had earnings on 7/31, and since earnings, they've sold off. So obviously they didn't have as good. Well, they didn't have earnings. Looks like the EPS is about half what it was. Not quite 50%, but got a pretty good dividend, 68 cents a share, or maybe 69. But it has come out of that RSI 30. So it looks like you got a good support level here at $50. That's your magic number, and your resistance is going to be 52. So you got 50, 52. That's a pretty good risk reward. But Friday, the stock did puke just a little bit. So be careful. But the line in the sand needs to be 49.97. So be careful on this one on Enbridge. Okay. All right, so let's see what at Microsoft, MSFT, Mr. Softy. Mr. Softy is in consolidation. It looks like a bull flag. That's pretty positive. Gapped up here. We got a pretty good flagpole, and then we're going sideways. So you got a pretty good bull flag there. And it looks like to me, Microsoft needs to stay above $475. If it can stay above that support, it's got a good chance getting back over this 514 level. Now, remember, your software companies, they're very AI dependent, newsworthy, meaning any kind of AI news, a lot of these software companies are being threatened, and that's the reason you've seen massive, way down, way up. I mean, Microsoft, look at this RSI, broke below RSI 30 on 6/25, and it was $349. And after that, it came out. Look what it did. Went all the way up to 513. I mean, we're talking about $165. Unbelievable. So there's another history lesson. Okay. RSI under 30 is a great time to buy a good company because it's on sale. If I owned it, I would not sell it, even though you got all this AI out there, behind the closet or whatever. But new money on Microsoft, I'd probably wait till we had a sell-off on that like you did. It's been under RSI 30. I'm looking at the bottom of this page 3 times. 2 times in March, 1 time in June. Could get back up under it. If you do, if it gets under it, be a buyer, and I would be buying options on that, not shares. GLD, gold, fabulous chart. Okay, especially the last month or two had a little bit, but right now it's oversold. The RSI is 71. Wouldn't be a buyer. Okay, and I'd wait for that, as I said, to come back down. It got under the RSI 30 in March, and on 6/10 and on 6/24. So 3 times. So look at the last time on 6/24 it got under it. It was right here, 363, and boom, had a pretty good run since then. Okay, last ticker. We're gonna get out of here. CRUS, and Cirrus Logic looks terrible. Okay, got under 30. Looks like on August the 3rd. And then it's gotten further down in there. It is the RSI is at 26. So 1 or 2 things are going to happen with this company. It's going to go completely out of business, or it's going to come back. So here's another one that could be a buying opportunity. So I'm going to circle TJX CRUS. Okay, so we're looking at a company that doesn't get under 30 very often. I don't know why it's there. But I would want to look and see, is this company financially stable? This looks like a good time to buy it. And the next thing, what about volume? Do I need to buy shares or options? So I'm going to go to October 16, and would not be buying options. Didn't take long. So this is another one you need to buy shares. Not enough options, not enough volume. Okay. But I would definitely, you could dip your toe in this one. You're right at the 52-week low at 114.67. The stock closed Friday at 115.33. So to be very honest with you, if I bought it, I'd probably put a stop loss at 114. That's probably what I'd do. I know that's tight, but here's the thing. It may go further in there and get close to $100 a share. So I'd get out of it if it got under that, and then I would buy it back if it got down close to that 100 share mark. Okay. So that would be a very good risk reward, because it's got a lot of ways it can go higher, a lot of room, I should say. And you got a very tight stop. So you're looking at losing basically $1 a share, if you would, maybe $1.50, if that makes sense. Okay. So I'm going to stop sharing this and go here. And I'm going to tell everybody, I really appreciate you being here. And I didn't get to everything. And you can, on Facebook, on Twitter, whatever, you can DM me and I'll tell you what I think about that stock. But I'm going to need to get out of here. I've been on here 1 hour and 16 minutes. Hope you have a great week. And I really appreciate you. Take care.